What is going on, investors, salespeople, human beings? What the hell is going on? Andrew here, the Hard Money Lad, and today I am coming at you with another podcast episode. We are at the Tennessee office, as you can tell, not officially the office, but we are remote right now. And what a blessing it is to be able to travel with some of this podcast gear. You see, I got the laptop, I've got the mic I was able to bring, I've got my bar light over there, which I was able to bring. Did cause a little bit of an issue in TSA, but we got clear with that. Just a huge battery, man. I got my tripod, which is the best tripod ever. It breaks down into the size of like this MacBook, and then it opens up into the size of like 8 inches taller than me. So you got that thing at 7 feet tall, right? No, it's great. What a blessing it is. So I'm really happy to be here and to be recording another podcast. Today's is going to be a good one, guys. It's for the real estate investors, or for the people who are wanting to learn about real estate and how they can kind of conquer that vehicle to wealth. This episode is for you. Let's roll right into this, guys. This is going to be about hard money loans. So we're going to go over, they're also known as bridge loans. All right. So if hard money just triggered something in your head, bridge loans as well, short-term loans for dilapidated properties, private loan. There's 100 different terms. Hard money is probably the most known. Private is probably the most appealing. So we're going to go into the what, the why, the how of hard money loans. We're going to do an example of a hard money loan. But first, I just want to talk real quick about fixing and flipping properties in general. All right. So obviously just breaking down that word, it's acquiring a dilapidated property, fixing it up, and then flipping it for a profit. All right. There's a lot of people who are doing right now, which is a BRRRR, which is acquiring a dilapidated property, fixing it up, but then holding it as a rental. And I didn't mean to jump around there, guys. All that fixed to rent model stands for in the BRRRR acronym is the buy, the rehab or renovate, the rent. You rent the property out to a tenant. You refinance, meaning you put a nice long-term 30-year low-interest mortgage on that property. Hopefully pull out some cash because you sunk some cash into the property. So you do that refinance, and then you repeat, which means you go and you do the same thing over and over and over again. So that's the BRRRR method. It's popular right now. Just know, guys, for the first step of any of these methods, if it's a dilapidated property or some sort of property a bank's not going to lend against, some sort of unique scenario with the zoning, with the current use of the property, maybe it just needs a lot of repairs, you are tackling that first step, whether it's of the BRRRR or of the fix and flip, you are tackling that first step with a bridge loan, with a hard money loan. All right. So two terms that mean the same thing. So let's go right into it, guys. Oh, yeah, so basically just, I kind of just explained that. You guys know flipping houses is lucrative right now, especially right now as the market's shifting back over into the buyer's favor. We just got one of our investment properties in Richmond for $40K under what it was listed at, and I think $60K under what it was initially listed at before they brought it down after about 30 days of sitting without any movement. So it is a buyer's market. Don't let anyone tell you otherwise. Fix and flip, fix and rent. It's a good vehicle for wealth. It's a good way to build your rental portfolio, build your net worth, and kind of set yourself up for success, whether it's continuing down real estate or tackling another avenue. Real estate investors who are looking to do these fix and flips or these fix to rents are in need of a hard money loan or a private money loan in order to acquire that dilapidated property. I could go over 100 reasons why, but it's dilapidated. A bank's not going to lend against a property that needs repairs, right? That's usually the biggest thing, and that's the easiest one, so we'll stop there. If you want to Google it, you want an LLC, you're self-employed, you don't have 2 years of commission. Hard money loan, what is it? It's a short-term loan. It's secured by that asset, so the collateral is actually that piece of property that we're lending against. There's usually, if you're working with a good lender like myself, there's no prepayment penalty on that 1 year loan. So we want our borrowers in and out in about 3 or 4 months, unless they're pulling permits or they're dealing with the well, or they got, stuff that they got to deal with the city. 3 or 4 months is a good time frame. So when you're thinking about costs out of pocket, you're spending one interest only payment a month for 3 or 4 months. Sorry if you're not watching, I'm just holding up my hand. And then you got closing costs on the loan. So really, obviously the numbers have to work out. But when you're thinking about if this is something that's overwhelming or not, it's not. It's really not, guys. We're providing right now, we're doing 90% of the purchase price, 100% of the renovation funds. So that means as a borrower, you're responsible for a 10% down payment, right? And closing cost, which is phenomenal. It's very aggressive. You can't even get that. Maybe you specifically do, but most Americans don't even qualify for a 5% down payment on a traditional home loan. So I'm only 5% above that, and this is an investment. So it's a pretty competitive product, guys, and it's going right into your LLC, so even more investor friendly. But yeah, no, that's what it is. So we're basing our loan on the after repair value of the property. We're basing it on your current credit score. A couple of years ago, there used to be a bunch of track record requirements to base the loan on as well, because again, it is in-house financing. It's quick, it's hasty, it's more risky. So we've got to look at the after repair value of the asset. We've got to look at your credit score. And again, they used to look at experience, no longer do that. I think it's been about 2 years now that they got rid of the experience requirement, which is great because sometimes proving a track record is hard if titles changed hands a bunch of times, or if the property went through some sort of zoning issue or real insurance issue. So it's good that we don't have to prove that anymore, but there are benefits to doing that. Like you can save some costs on the closing costs if you are more experienced. So that's the what for the hard money or the private money loan. Let's go into the why. So as an investor, why are you going to be using a hard money loan? Why are you going to be using a private money loan as opposed to just going to a conventional bank? So we already kind of mentioned one of the things, a dilapidated property, right? You're not going to get a bank loan against a dilapidated property from your SunTrust, your Capital One, your Bank of America, your Sandy Springs, none of that. So that's the first thing to keep in mind. I would say the other thing that we did mention earlier, and that I'll keep at the top of this list right now, is the requirements in terms of investment, right? So I'm giving loans straight into your LLC. You're not able to do that, at least not with the same qualification, ease of use with a conventional bank. So just keep that in mind. If you are doing a LLC loan at a conventional bank, your LLC is viewed just like you as a borrower, meaning it needs to be seasoned, created for 2 years or more. It needs to have a credit history. It needs to have its own assets. It's viewed just like you. It's just copy and paste yourself and put your LLC name instead of your own personal name, and that is what it's viewed as. Whereas with me, it just has to be under an LLC, right? Like I don't have seasoning requirements for the LLC. The LLC just has to be created and known by the federal government and by your state government. So your articles and your EIN, right? That's it. It doesn't have to be seasoned. It doesn't have to have a credit score. It doesn't have to have assets. You're still my borrower, and all I need from you is a good credit score. And no bankruptcies, felonies, or foreclosures within the past 3 to 5 years. The felonies is financial crime. So just keep that in mind. Those are the two things that we already talked about. Now let's talk about some things we didn't discuss. So ease of use in terms of speed of funding. All right, so a lot of times you won't get quick fundings. If you've gotten a conventional loan before, you know what the process is like. It's tedious, it's boring, it's annoying. We're even going through it right now for an investment property with a conventional loan. Obviously, the rates are lower, and this is a turnkey rental, so this wasn't something that I needed to rehab at all. So different scenario, but it's still a pain in the butt. So in terms of the qualifications, I'm pulling your credit. You're submitting a scope of work to tell me what you're going to be doing to the property to get it up to the value that you think it's worth. You're ordering insurance. We're ordering title. And you're getting me this sales contract. That's really it. It's really easy, simple, smooth, and efficient. So these allow for quicker closings. I'd say right now, if you take volume away, we'd be at about a 14-day closing for the hard money loans. Add the amount of volume and the demand right now, it's about 16 to 18 days, which is freaking great for a national lender. You can find some lenders that can close quicker than that are smaller and local. They have in-house capital, maybe in-house underwriting or something like that. But those are going to be your 12 to 15% interest and your 3 to 4 points on your origination fee, which is absurd, but they can charge that if you're in a situation where you need to close in 4 or 5 days because previous financing just fell out or because someone's in a rush to move, something like that, right? So that's the why. I mean, I said it, right? The easy qualification. I said the fast funding. I said the investment purpose. I got another one, higher loan to value, which we kind of mentioned previously as well. Again, a lot of Americans right now can't even qualify for 5% down on their own personal home. So imagine me telling you only need to bring 10% down on an investment home, guys. It's just worlds apart. So that's all I have there. Oh, no, I got one more for you. No prepayment penalty, which we also already hit in the what. Damn it. I really mixed the what and the why together here, but I'm teaching you guys, right? So hopefully this is good. Some things, sometimes you say it twice and people learn it, retain it a little better. So no prepayment penalty, all right? So most people are in and out in 3 or 4 months. It is a year-long loan. You got a year to get done. You're fix and flip or you're fixed to rent. You got a year to get that done. Most people are in and out 3 to 4 months. So there's no prepayment penalty. Obviously, I want that money back. You give me that money back quickly, I can put it out and I can charge fees again on it and I can charge interest again on it. So there we go, guys. The how. So we did the what, we did the why. We're going to dive into the how for real estate investing, guys. And I am so sorry my camera just died. This is going to be fun to edit later because I've got a situation where I had 2 cameras rolling and a mic pause. And then I got a situation where I got a mic continuation, 1 camera rolling, and 1 camera dead. So I'm looking forward to that, but let's do the how right now. I'm looking forward to this more. So we did the what, we did the why, the how for real estate investing, guys. You need to find a good loan officer. Let's start there. All right. So part of the 5 fundamental individuals that you need in your corner before you start real estate investing: a good loan officer, a good insurance agent, a good title company, a good appraisal company, and a good realtor. All right, those are your 5 core fundamental people you need in your corner. So with that good loan officer, you're going to make sure you get pre-qualified. All right, so they're going to tell you the LLC requirements. Like maybe you have a trust. You need to know, can your lender work with a trust? Or are they only doing LLCs? Maybe you need a non-recourse loan. You need to know, are these loans recourse or non-recourse? So you need to connect with the loan officer so you can get pre-qualified, but also so you can make sure to ask those kind of weird anomaly questions to see if that's something that your lender can tackle. They should know those answers right off the bat. If they're telling you that they got to find out, that means that you're probably the first one bringing it up, and maybe you want to call the next lender and see what's going on there. You want somebody that knows what they're doing, all right? They have the answers to those questions for you. So you got that loan officer, all right? You got them on the phone. You've gotten pre-qualified. You know your LLC works. What's next? Start looking at properties, guys. Call that realtor. Start doing some walkthroughs. Get some listings sent to you. Little you guys know, all these realtors have automated lists. So a lot of times, don't get me wrong, a lot of times they are doing the work to send you properties, but a lot of times you're being added to some sort of sequence of criteria, right? Investment sequence. This is a traditional homeowner sequence. This is a condo only sequence. So a lot of those may be automated. So don't feel like you're burdening someone by telling them that you want to become an investor. All right. So yeah, just get over that. Get over that. I don't know if it's an ego thing for you or if it's you think that, they're just going to turn you away. They're not. It's the market's shifting right now. There's a lot of investors that there's a lot of realtors that want to focus only on investors. I'm having the calls with these people daily. I mean, they're asking me to provide information on my lending programs because they are working with investors. So, I think that was a big change that came with COVID too, but never mind. We're not going to rant on that. So you got your loan officer, you got your LLC pre-qualified. You got all your anomaly questions out of the way. You're in touch with the realtor looking at properties. So what's next? What's next is your running numbers, guys. So you either need to make sure that loan officer is able to run numbers for you quickly and get it back to you so you have an idea what you're working with, or they're one of the more advanced companies and they've got an online platform for you to go and run your own numbers. All right. So you run your numbers, you make sure your numbers work out. And then what you're going to do is you're going to get with your loan officer and you're going to let them know that hopefully your offer got accepted. You made an offer on that property. It got accepted. You're under contract now. Like we are in Richmond, you're under contract on that property. So once you're under contract on that property, your loan officer is going to start telling you what it is that they need in order to get the loan done. So they should collect that sales contract for you. They should send you some insurance requirements, maybe some title requirements, but that should go direct to the title company, and some document requests to include what we previously mentioned, that scope of work, right? So show me what you're doing to the property. I want to see it be worth $350, but I need you to paint that picture for me because you're only buying it for $150. So where are we getting this $200,000 if you're putting 60 into it? Show me. Make it pretty. Von Gogh it. And it's not just for me. It's for the appraiser, the in-house appraiser who's determining the after repair value, or whoever your lender is using to determine the after repair value. That's who's reviewing that scope of work. They want to see it's going to be worth what you think it's going to be worth based on X, Y, and Z, right? So that's really the how, guys. Once you've got the process started, you get your document request. You're basically waiting on that. For us, it's an in-house appraisal. For you, it may be a boots on ground, whatever it is. You're waiting for that valuation to come back, where that appraiser, looked at your scope of work, looked at the property, looked at comps, and said, hey, this is going to be worth $350, just like they think it is when they're all done, as long as they stick to the $60,000 worth of work. So that's the how, and then we take you to closing. I mean, it's really easy. A lot of the communications between the processor and the title company, the processor and your insurance agent, me and your numbers when like the appraisal comes back, or when you're making offers and I'm running numbers for you, and then really just you and getting us documents, getting through processing, getting through the bureaucratic red tape, as you would call it. But again, guys, remember, I need an LLC. I don't have any requirements on that entity. I need your credit score to be above 660, preferably 700 if you're looking for best rates and best fees. And then I need to see that you got a good deal going on. I need to see that your scope of work is going to justify that after repair value. So that's really it. I want to name one more time the 5 people that you need in your corner, because I feel like I haven't seen this enough on social media, and I think it's crucial. All right, maybe this is just so I can clip it later too. Who knows? You need a realtor, you need a loan officer, you need an insurance agent, you need to know the name of a title company that's reputable, you need to know the name of an appraiser that's reputable. This is 5 fundamental people you need in your corner if you want to be a successful real estate investor. So keep that in mind, guys. This was the why, the what, the how in an example of a hard money loan. I hope there was some value here. Please, 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 please like the podcast, guys. Please turn on the bell so you get notified when these episodes go live. This helps me stay creative. This helps me stay motivated. One of the things that we are thinking about doing now that we're making more real estate oriented content is bringing on more guests. There's so many people in this kind of world walking this path, not just lending, but the 5 things I just named off for you guys, right? The realtors, the title companies, the insurance agents, the appraisers, who are all doing this stuff, who would all love to talk about it. So, please like, subscribe, follow me on my socials. Hard Money Lad out. See you guys.